commercial vehicles, and that's a very tricky one because you've been heavy discounting in the market. That's what your industry competitors say, that Tata Motors.
They can be saying that. You shouldn't be saying that, because you are making it a statement. I challenge that.
Yeah, and and in the last 1 year, you have arrested the fall in market share, but even being aggressively selling it, the market share has gone up by just 50 bips for you. What are you doing to ensure that you have an aggressive growth rate and as well as increase in market share?
I think winning decisively the brief for CV. Yeah. Let me set the record straight as far as discounting is concerned from our point of view. I don't want to talk competition. As far as I am concerned, my variable market expenses for this year is significantly lower than last year. With that, the discounting question is over, because if I'm not spending, I don't know where else I'll get money to do it if my VME is lower. That's where I account it. That is lower than last year, full stop. As far as overall model of CV is concerned, one of the things you should remember is that the environment has changed from overloading to rated payloads.
Exactly.
Which gives me enormous opportunities to cost engineer out. And that game has just begun. So therefore, we'll continue to do the cost engineering to ensure that we are delivering the right one. Now here I'm not talking VME. I'm talking contribution one, the DMC cost that we have in creating a vehicle. That is how we are going to improve our profitability both on DMC and VME, both together. And more importantly, as far as the overall customer is concerned, it has to be solutions. It just can't be a pricing that you dare, which is the reason we introduced a 6-year warranty, for example. Yeah, there. As far as the share is concerned, I think if I look at it's the first year after 7th year that you've done it, the share increase. My volumes that I'm selling in the market, I still don't supply the full demand that is coming to me, simply because my supply chain is not yet ready for full services that we could render. And
how much time will it take for you to?
I think we have ramped up from about 16,000 vehicles that we used to sell in the month of April. We went up to 49,000 vehicles when we finished out in March. So that's the kind of ramp up we have put in place there. Still not sufficient. So rest assured, if there's one place there is monstrous heat in the company, it's to ensure that we get everything else right. Our vendors need to ramp up, and you'll find that is a conversation wherever you go about Tata Motors getting its supply chain ready and picking it up. And we would want to ensure that we are working with reliable vendors. Therefore, reducing the vendor base is an important piece for that, so that people have the scale to ability to invest, so that we can grow, because the growth is definitely to be taken. So therefore, there is a lot of work happening. When we're expecting in the next 3 to 6 months, this supply chain issues will all be fully ironed out, and whatever I get as an unconstrained demand in my S&OP, I'm able to produce on a weekly basis exactly in line with that. That gap is still too high for me to just say we have got our supply chain right.
And do you see any headwinds coming in this segment?
I think for me, if there is 2 things that worry me as far as this segment is concerned, is 2. Number 1, inflation. Inflation coming from various routes, rupee depreciating because of trade account, or crude prices going up, hence diesel going up, and therefore inflation in the overall economy, or freight rates not rising to match inflation because the consumers, the drivers and the fleet operators are in trouble. That for me is one concern I have.
Fleet, and I was speaking to Girish as well, and Girish was telling me that of late fleet operators have started coming and saying fuel prices are going up, and that's worrying them, and so they're taking a hard look on whether to expand the fleet or not. Is that going to be a big worry for your segment? Because CV has been performing well, but this could be a dampener going forward.
Right? No, I've called it out specifically in my this one. There's 2 things that worry me. This one is number 1, and number 2 is interest rates. Because if this continues this way, then you'll have interest rates will have to rise in order to quell that. But I'm absolutely confident between the RBI and the government, they will be taking all steps to ensure that inflation is kept under control and interest rates are also managed well. But of course, this can't be taken lightly, and this is something which I'm sure everybody worth the salt is really going to look into it extremely carefully. And for a CV business, these 2 become very, very important, and it is important that we don't lose this lovely bounce that is coming back in this, because the cycle has just started. Typically it goes through 3-4 years, it goes. This is the first time it has started there, so we shouldn't abruptly end it without because of these reasons. But when you looked at the kind of investments in infrastructure, overloading restriction, GDP growth, on balance I am more optimistic than worried, which is the reason we said we are optimistic about demand. But we should move fast as far as inflation and interest rates are concerned. Worries of those need to be quelled.